Welcome back to our attendees. Our speaker, Dr. Bello Lawal Danbatta, Secretary General at the Islamic Financial Services Board, speaking on today's topic, digital transformation in Islamic banking. Over to you, Dr. Bello.
Thank you once again, and it is indeed a great pleasure and honor for me to be part of this important summit. As you heard the introduction, the Islamic Financial Services Board is an international standard setting body that is based here in Malaysia, but with a membership from 57 countries that comprise of about 188 members, which included the regulatory and supervisory authorities, 99 market players, as well as international organizations that include the Islamic Development Bank, the International Monetary Fund, the World Bank, the Asian Development Bank, and many others. The topic of today is very, very timely and is very important. I think the organizers have looked at the current situation and chose the right topic, particularly for the Islamic banking and finance industry. As you are all aware, the Islamic financial services industry has made a commendable progress over the years. The total worth of the IFSI, that is the global Islamic financial service industry, across its three main sectors, that is banking, Islamic banking, Islamic capital market, and Islamic insurance that we call Takaful, is estimated at USD 2.7 trillion in 2020, making a year-on-year growth of 10.7%. The Islamic banking sector, of course, remains the major contributor with 68.2% share in terms of the share of the global Islamic financial service industry total assets. Despite having a slowdown in growth, the Islamic banking sector recorded a positive growth, particularly in terms of year-on-year growth of 4.3% in 2020, amidst the COVID-19 pandemic challenges. And in terms of the dollar value, the Islamic banking sector is currently valued at 1.8 for USD trillion dollars as at the end of Q3 in 2020. Now, looking at the topic of today, that we are talking about financial technology or Fintech. The Fintech has been growing at an exponential rate, which leads to the emergence of innovative business models in the global financial services sector. And particularly the Islamic financial services industry is part of this development. Innovation in the Islamic finance now takes place with Islamic banks partnering with Fintech companies, or you can see Islamic banks now developing their own Fintech applications. And of course, at the outset of the pandemic, since the beginning of the COVID-19 pandemic last year, which is there has been a number of unprecedented containment measures implemented by various countries, particularly the governments and the regulatory and supervisory authorities, which meant to ensure that the industry continue, or the economies continue to be sustainable, and as well as the importance of the financial service industry is not at a disadvantage, by leveraging as well on technology and building the capacity of the bank to shift its own businesses to online is part of the business continuity plan that has been deployed by many jurisdictions. However, the phase of digital transformation and Fintech collaboration in Islamic banking particularly has been lagging behind when compared to the conventional banking areas clearly relating to the specificities of Islamic finance, which is Sharia compliance. Definitely, the future is bright based on a number of assessments and analysis that has been done by various stakeholders. Applying the Sharia principles on which the Islamic finance is established in Fintech is one of the key considerations as one of the major challenges that will pave way for the development of Fintech, particularly when we are talking about providing digital solutions or using technologies to facilitate Sharia compliant financial activities and transactions, at the same time of holding and entrancing the Sharia norms and principles. And these include promoting transparency and fairness and equitable risk sharing in Islamic finance, as well as ensuring that the players, both the providers of the services and the users of the services, are very much familiar with the Sharia principles with regard to this. And I believe the Islamic banks that are currently partnering with a number of fintech companies or what we call Islamic fintech companies. They do such to ensure that the partnership provide the needed synergy capable of unlocking the full potential of Islamic finance toward a sustainable, inclusive, and impactful growth of the global financial services industry. And I was opportune to look at the global fintech reports last year and this year as well. And in the Global FinTech Index 2020, it is anticipated that by the year 2022, 60% of the global GDP will be digitalized. And digital financial services will serve as the key power to the global economy transition to the fourth industrial revolution that we are currently witnessing. And the report in 2021, basically that is the Global FinTech Report 2021, estimated that the 2020 FinTech transactions volume within the OIC countries alone to be around 49 billion US dollars. And Islamic fintechs are projected to grow to 128 billion US dollars by 2025 at maybe an average cumulative growth rate of 21%. This is higher than the growth projection compared to conventional fintechs, which is projected to be 15% cumulative average growth year on year for the same period. Now, looking at these statistics and estimation, and due to the structural composition and dynamics of the traditional and potential customer base, the Islamic banking industry, we believe, is well placed to lead the digital transformation through the adoption of fintech. According to the Islamic FinTech report in 2018 that was compiled and shared with in many platforms, I mean, 15 among the top 59 countries with smartphone penetration, OIC member countries, compared to 49% worldwide. And 72% of these unbanked population reside in the OIC member countries, which created the potentials for the Islamic finance instruments or any product and services that can be structured in these countries. However, the median age of Muslims worldwide is 24 years compared to 32 years, previously estimated. Now, looking at the median age to say that majority are young, people, then in that case, the massive deployment of uses of technology because of their own foresight and the way they are used to using technologies and particularly mobile phones, any financial services or product that is being structured. In fact, now seen with the pandemic, even education is all being conducted by majority of institutions, right from the kindergarten to universities are being provided through the online platform. So any product and services that is being structured using a mobile or internet-based will provide some kind of wider coverage and inclusiveness of this youth into the financial system. So definitely the high mobile penetration and internet usage among the tech-savvy youth in these untapped markets, particularly in the OIC member jurisdictions, will hold a great promise for the growth of the Islamic banking industry and Islamic finance in general. Now, the Islamic fintech or fintechs that use Islamic principles or Islamic products and services has been progressing well to make a meaningful contribution towards the digitalization of the Islamic finance and economy. And then the global fintech, we have seen that in their reports has identified that 241 Islamic fintech globally catering to the wide variety of the financial services, inclusive of the Islamic fintech companies. Now, this is really a big number, but of course, compared to the number of financial institutions that we have, this is very insignificant. But I think the growth trend is what we are very much interested in. And we at the IFSB, we have conducted a survey in 2020, in which we found that among the IFSB member jurisdictions, majority are interested in digitalizing their products and services, mainly to increase customer value and satisfaction, and as well as to ensure physical distancing due to the COVID-19, in addition to enhancing operational efficiency, promoting organizational agility and modernizations, and increasing market penetration among other reasons. It is also observed in that survey that the Islamic banking industry has been investing heavily in fintech, such as mobile and digital wallets, the use of biometric authentication and application programming interface open the banking accounts or to do the banking transactions has created another important milestone in terms of the development of fintech. Of course, we have also identified that cloud computing while investments in more advanced technologies, using more advanced technologies like artificial intelligence, robo-advisor, distributed ledger technology, and smart contracts and Internet of Things are yet to take off. Are yet to take off in some of these jurisdictions. However, these findings are consistent with the Global Islamic Fintech Report 2021 that identified that Islamic fintech services in payments, deposits, and lending and raising of funds to be relatively crowded segments in the nearest future, but with a high momentum that will be reflected in the segments in which Islamic banks have a higher stake as well. But this potential actually is not only limited to the Islamic banking sector, but of course extended to the capital markets, the Islamic capital market. And then among the recent developments, several OIC member jurisdictions have realized the potential of benefit of fintech and actively supporting its development through a number of initiatives. We have seen a long time ago that a number of regulatory sandboxes has been introduced, and some countries are building centers for startups to interact and collaborate, and providing early age stage funds or take-off funds, and connecting fintech companies across borders with other investors. And there are actually been a lot of efforts being done to ensure that the Islamic fintech companies has been serving as one of the important tools for financial inclusion and Islamic social finance agenda as well. Islamic banks are generally committing huge investments to digital transformation initiatives, through which the full-fledged digital branches are being opened. For example, we have seen that this year the UAE has set up one of the first fully fledged Islamic Sharia compliant digital bank, which is called Rizq Al Barakah. So it's also another important development that we recognize in the industry. Similarly, an Islamic bank in Turkey also, in partnership with the German bank, launched a fully fledged Islamic banking service in 2018, which is targeted to Muslim community in Europe. The DIFC, which is Dubai International Finance Center, as well initiated Fintech Hive, which is recognized as among the first and largest financial technology accelerator in the Middle East, Africa, and the other part of the region of the world. Now, and most recently, we have seen that the Bubian Bank in Kuwait has informed that they have launched the world's first Islamic international digital bank that offers the Sharia compliant UK bank accounts and financial management services for clients in Kuwait and in the Middle Eastern region. And I believe these developments are being there in many IFSB member jurisdictions, in many OIC member countries, and they are meant to promote financial inclusion and efficiency and expansion as well of the financial services industry, particularly the banking sector. And the initiative, due to the pandemic, a number of Islamic banks have introduced various mobile banking apps and, as I mentioned, digital wallets as part of their initiatives. Of course, the few banks have also introduced chat banking and through the WhatsApp platform, because it is encrypted. And then this will further definitely enhance the experience and engagement of the customers as well as the digital banking channels. Now, we are aware that there has been tremendous developments using other technology, financial technology initiatives, like the blockchain technology is also being increasingly used for the operation of smart contracts in Islamic banking. And then a number of other jurisdictions have used this blockchain technology to, to launch a number of social impact sukuk or sukuk that's been used to drive development in a number of economies. But of course, one important thing that we must realize is that new developments, new opportunities come with new challenges and associated risks and vulnerabilities. So digital banks are definitely vulnerable to cyber risk attack, and then the financial services in the sector is the most targeted of all industries in a number of reports compared to other non-financial sectors when it comes to the cybersecurity risk. Now, digital transformation, of course, it is a complex process and requires specialists to implement it. And Sharia non-compliance is our greatest concern when we're talking about Islamic banking and finance. It's one of the major challenges that we believe that need to be addressed and must be addressed seriously by all parties involved, not only the regulatory, not only the regulators as well, whether the authorities, but as well the financial institutions that are used in fintech. Because I mean, this is an area whereby the Sharia, it requires a physical evidence of items in the transactions and declaration of the transactions, as well as transparency and disclosure of contracts are actually in line with Sharia. And then this is something that we believe a capacity need to be built, and a robust regulatory framework is essential in this regard. Because Sharia non-compliance risks is a key impediment to development of Islamic finance. So definitely we will really recommend that the institutions, the regulatory and supervisory authorities, as well as the fintech companies taken on board this important or serious concern that will really jeopardize the industry if not properly handled. And according to the Global Islamic Fintech Report as well, the access to capital is seen as the biggest barrier to growth of Islamic fintechs. So in addition to the associated risks with regard to technology, I think the ability for the fintech companies to raise funding, sufficient funding to actualize their innovative ideas by providing some financial solutions is necessary and essential. And I think this is an area whereby investors, private investors, governments, development funds, and other development institutions should come to support this kind of initiative. But of course, the availability of talent and customer education and a robust regulatory framework will always be a key to the success of such. So this is a very important area where we believe that there are opportunities, but there are associated risks. So if the funding is not provided, then definitely the fintech companies' full potential cannot be utilized. The opportunities available in the digital banking, of course, include less operating costs and maximizing profit, as most of the things that attracts the Islamic financial institutions or financial institutions to venture into it. But I think this needs to be done in a very social manner, because we want to reduce operating costs, and we want to maximize profit, and then at the same time we want to attract young, customers or the young generation that are very, very, critical in their own thinking, and they like excellence with speed and at cost that is made readily available. So we feel that there is a need for a balancing act by the institutions that are promoting the Islamic fintechs, particularly the financial institutions. We promote that, we recommend that it should be considered more on the social economic development basis rather than maximizing profit. But of course, we don't want the institutions to operate at a loss. So there is a need for balancing between this important issues. Now, Islamic finance, of course, is based on the principles of shared prosperity, social responsibility, and inclusive participation. It has a greater social or socio-economic role to play in the current context, particularly the pandemic. We have seen quite a number of countries are now promoting the utilization of Islamic social finance instruments like zakat, waqaf, sadaqah, and many other socially based finance, because many are affected. The businesses are affected, the individuals are affected, many lost their jobs and so on. So the Islamic finance has the greater potentials in addressing some of these challenges that we have. But of course, the most important thing is to ensure that the application of whatever structure that is to be promoted is in line with Sharia. And we have seen, according to the World Bank Group, that the COVID-19 pandemic is estimated to push an additional 88 to 115 million people into extreme poverty by the end of 2021. And then with the total rise in as many as 150 million. So depending on the severity of the contraction of the economy, so definitely there is a need for considerations of economic recovery initiatives using fintech. And this entails greater purpose of Islamic banks as well as the whole Islamic financial service industry to adopt fintech in order to meet its financial as well as socio-economic role or responsibility in our respective economies. And then definitely the growth area for fintech goes around or is expected to be around the peer-to-peer lending and then crowdfunding applications like including challenger banking, the blockchain and the crypto and robo-advisory platforms. And quite a number of other platforms, even the micro takaful applications or the insurtech, So these are areas that we believe that these are very, very essential for the economic recovery out of the pandemic. And that's why I mentioned from the beginning, I think this is one of the most important topic for the summit. And I think the topic was very, very timely and very, very essential for the global Islamic finance industry and for the global economic recovery as well. Now, but that notwithstanding, as a prudential standard setting body, the IFSB always promotes that regulation of the digital banking and fintech companies is very, very essential to actualize and realize the full potential of banking, and then as well as the economic development that is being aspired to. With the acceleration of digital channels to provide financial solutions as a result of the COVID-19 pandemic, there is need to carefully consider the need for a robust regulatory framework in these areas and to address any gaps that is currently existing. We are aware that a number of regulatory and supervisory authorities have relaxed some of these policies and have now drafted an exit policy or strategy to exit out of some of these policies that has been relaxed. But I think what is more important is balancing between this financial resilience, soundness, as well as the development of the economy, and then the recovery phase to be very, very fast. So we believe this is essential. And while some jurisdictions are actually applying maybe existing banking laws and regulation to bank within their limits, regardless of the technology they apply, other jurisdictions have been very proactive to set up specific regulatory frameworks for digital banks. And we have seen quite a number have even issued digital banking licenses and have licensed a number of fintech companies, even for the Islamic banking and finance industry. So there is a need to have a clear role and responsibility in terms of application of fintechs in the global economy, the role of the central banks, the role of the technology companies, the role of the responsibility of regulating the technology companies need to be very, very clearly outlined in order to have stable and resilience for the global economy. And in our efforts, the IFSB has supported this development of fintech in a number of ways. We try to support our members with a number of standards and guidelines so that they will be able to develop some kind of regulatory framework. So, and most of our standards are free and available in our website because they are fully funded by our membership. And then we encourage all our members and non-members, if they are looking for guidance to develop fintech, to go to our website and look at our standards and download these standards and use them as a reference and a guide in developing their regulatory framework. We have particularly issued a technical note 3, which is on financial inclusion in Islamic finance, way back in 2019. And that technical note was developed to provide guidance on good practices in regulating the financial sector to enhance financial inclusion through the Islamic finance, while also considering the proportionality in balancing the benefits of regulation and supervision against the risks and costs for using technology. It covers recent developments in enhancing financial inclusion through digital finance and financial technology platforms. So it's a very important document, and that will help you as a regulatory and supervisory authorities to develop guidelines. The technical notes specifically address the different channels used in digital finance, including web-based platforms, agent branchless banking, and mobile or network operators involvement in such initiative. In addition to that, the technical note also address the issue of data protection and cybersecurity, and we outline several recommendations for the regulatory and supervisory authorities in this regard, so that they will be able to abreast themselves with what is needed and what's need to be done in order to mitigate the potential risks of the COVID-19 pandemic, as well as the accelerated digitalization when it comes to financial inclusion agenda in Islamic finance. In that same technical note, we also support our regulatory and supervisory authority members to look at the Islamic social finance instruments like the Waqaf, on how that can be deployed as a crowdfunding instrument and to support the global Islamic financial service industry development. The IFSB has also issued a standards on disclosure to promote transparency and market discipline for the takaful and retakaful undertakings, which we call the IFSB 25, which was issued last year. These particular standards address the issue of conducting takaful businesses through digital channels, including internet and mobile phone solutions. The standard provide recommendations to the regulatory and supervisory authorities on the types of disclosures that are required, particularly in terms of disclosures when offering takaful products through these digital channels. The IFSB, in addition to that, has also issued a guiding principle on investor protection for the Islamic capital market, which we call the IFSB 24. This standard discuss the use of technology-based platforms to provide investment advice, as well as the taxonomy for crypto assets. The standard provide guidance and recommendations to regulatory and supervisory authorities on how to regulate the use of technology when providing advice to clients. It promotes greater transparency for the purpose of protecting the investors in the Islamic capital market. In addition to that, as you are all aware, not only the IFSB do not only issue standard, but we also issue quality research papers. The IFSB, we have issued a working paper on digital transformation in Islamic banking, which we call the IFSB Working Paper 19. It investigates the operational activities and regulatory approaches relating to the Islamic banking digital transformation process across the IFSB member jurisdictions, and specifically the paper tried to provide the results of the investigation on the current status of technology adoption and the rationale for digitalizations among the Islamic banks. So we believe that these are important documents that will help to support the growth and development, as well as the resilience and soundness of the global Islamic financial services industry, particularly when we are talking about the Islamic banking and fintech. So the future of fintech, we believe, is very bright, and it will be the next frontier for Islamic finance. But of course, the vulnerabilities and risks associated to the accelerated digitalizations need to be carefully assessed and managed by all jurisdictions. So with these few points of mine, I would like to once again thank the organizers for inviting me to speak up in this important summit. And we look forward to the outcome of the summit's discussions. And we hope that these ideas and the experiences that will be shared, as well as the information that will be generated from this summit, will help to accelerate the developments of the Islamic financial service industry using fintech applications. So once again, thank you very much for the opportunity, and I thank you for listening to me. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you, Dr. Bello, for the detailed explanation. And yes, we hope to meet you in Sudan next year in person.
Inshallah.
Thank you, sir. Thank you, Dr. Bello.
Thank you. Thank you very much.